This indicator could show the exact bottom of every dip with incredible accuracy. Best part, it's completely free to use. Let's see how it works. Here on the Bitcoin chart, the price is seen dipping. Then, the indicator flashes green, signaling that this is likely the bottom and that the price will start to reverse. If we let the chart play out, what happens? The price reverses upwards, as signaled by the indicator. If we had taken a buy position here, that trade would have been very profitable. Let's look at another example. Here we're looking at Tesla stock. And again, the price dips and the indicator flashes green, signaling that this is likely the bottom. What happens next? The price reverses upwards, as signaled by the indicator. Now I know what you're thinking. This looks too good to be true, right? But trust me, there's a reason it works. And in this video, I'll reveal exactly what this indicator is. Not only that, I'll also reveal how you can use it to time the bottom on any asset with high accuracy. Let's dive right in. This video is about an indicator called the Williams VIX Fix, created and published on TradingView by a user named Chris Moody. To add this indicator to your chart, head over to TradingView, the platform I'm using for this tutorial. Then, load any trading instrument of your choice. In this example, we're looking at the Ethereum chart. Next, select a time frame. Based on my experience, this indicator works best on higher time frames, like the 4-hour or daily chart. For this example, I'll be using the 4-hour time frame. Finally, click on the Indicators tab and type in CM Williams VIX Fix Finds Market Bottoms, and select this one created by Chris Moody. Once it's applied, you can also choose to customize the settings, but I found that the default settings work best anyway, so just leave it as they are. So, what exactly is this indicator and how does it work? In short, the VIX Fix is an indicator designed to identify potential market bottoms by analyzing volatility in the market. It works on any asset, whether it's stocks, crypto, or Forex. Looking at it, it's pretty straightforward. The bars on the indicator measures the volatility of each period. Longer bars means higher volatility, while shorter bars means lower volatility. The concept behind this indicator is simple. It suggests that markets tend to bottom out when volatility is at its highest. So, when the indicator detects that volatility looks overextended, it flashes green, signaling that the area could be a potential bottom and that the price could bounce upwards. Now, even though it's a really good indicator, you shouldn't take trades based on the signals alone, as there are a couple of problems when used on its own. First problem is, if you look closely, you'll notice that while the indicator succeeds in finding market bottoms in some setups, there are also times where it shows false signals. But don't worry, I'll show you how to fix this in just a minute. Second problem is, when you're trading it live, you might notice the indicator has a tendency to display multiple green flashes, signaling that the market is bottoming. Eventually, the price does bounce. But how are we supposed to know exactly when to buy if the indicator displays multiple flashes? To solve these problems, you have to combine the VIX Fix with another indicator. Here's how. Go to the Indicators tab again and type in Stochastic. Click it and apply it to your chart. Once it's applied, you'll notice that the default settings for the Stochastic can look cluttered and messy. That's why I actually have my own custom settings, which makes it look much cleaner. Like this. And in my experience, the custom settings give more accurate signals compared to the default one. So, if you'd like to, however, if you insist on sticking with the default settings, that's completely fine too. But for the examples in this video, I'll be using my custom settings. So, here's how you can combine both indicators to create a high win rate strategy. First, we want to wait for the VIX Fix to show a green signal, like in this example. Next, look at the stochastic oscillator and make sure that the blue line crosses into the oversold levels, which is marked by this line here. Now, for your entry point, wait for the blue stochastic line to cross above the orange line, like this. But make sure the candle has closed when the crossover happens. Once both signals align, you can enter a buy position. For your stop loss, place it slightly below the last swing low. Set your take profit at 2 times your stop loss. As you can see, the price bounced and hit our profit target. Let's look at another example. Here, we see the price moving down, and the indicator gives the first green signal. However, the stochastic isn't in the oversold zone yet, meaning no entry. So, we wait. After a couple more green flashes, the blue line of the stochastic finally hits oversold and crosses above the orange line, confirming our entry. We can take the buy position, Place the stop loss near the swing low and set the take profit at 2 times the stop loss. As you can see, this is another profitable trade. Now keep in mind that this indicator specifically works only for market bottoms. But that doesn't mean it's limited to finding reversals. You can also use it for trend continuations as well. For example, here we can see the price was in an uptrend before forming a minor pullback. Looking at the VIX fix, it flashes green, and the blue stochastic line is in the oversold zone. Shortly after, the orange line crosses above the blue line, confirming a possible bounce at this point. And right after that happens, price bounced back upwards, continuing the trend. So as long as you spot a downwards movement, whether it's a pure downtrend or just a pullback in an uptrend, the strategy is still effective. Now, you might be asking yourself, what if we want to detect market tops instead of bottoms? Well, there's actually a way to do that too. Remember, I mentioned that market bottoms usually happen during high volatility periods. To find market tops, it's actually the opposite. A sign of a market top is when price goes up, but volatility, or fear, is low. The problem is, the VIX fix indicator doesn't show signals during low volatility periods. However, there's another indicator that could do that. Go to the indicator section and type in CM Williams VIX Fix Find Market Tops and Bottoms. Then select this one by Aaron Stone. This indicator is a modified version of the VIX Fix. It's designed to help you find both market tops and bottoms. For this indicator, the default colors are a bit different. A green signal shows possible market tops, while a red signal shows possible market bottoms. If you compare it with the original VIX Fix, you'll notice that the signals for market bottoms match exactly. Now, if the default colors seem confusing, you can easily change them through the indicator settings. To use this indicator for finding market tops, the process is pretty much the same as finding bottoms. First, you'll want to apply the stochastic alongside the indicator. And because we're finding market tops, you'll want to look for an uptrend. Then, wait for the indicator to display a green signal, which identifies a potential market top. Next, check the stochastic and make sure the blue line crosses above the overbought line, which is this line up here, and then wait for it to cross below the orange line. This confirms your entry. Once you've got the confirmation, you can place a short trade here. Set your stop loss slightly above. If you insist on sticking with the default setting above the swing high of your entry and aim for a take profit at twice the size of your stop loss. After that, price began to reverse and hits our profit target. Now, here's the thing. From my experience with this indicator, the signals for market bottoms tend to work much better than the ones for market tops. Because of this, I usually stick to the original version of the VIX Fix, which focuses on market bottoms only. Another thing I really like about this indicator is that you don't have to use it as a standalone strategy. You can also combine it with your own strategies to further validate your entries. For example, one method I like to use is combining it with key levels such as order blocks. Let me walk you through how to do that. First, go to the indicator section and type in Order Blocks Detector. Select the one by Lux Algo. As you can see, the indicator automatically detects the nearest order blocks, which are essentially areas where the price might potentially bounce from. So, here's how we combine the order block detector with the VIX Fix. First, start by identifying a setup where the price retraces into an order block, as shown in this example. Next, wait for the VIX Fix indicator to display a green signal, which shows a potential bottom. After that, check if the stochastic is in the oversold zone and ensure that the blue stochastic line crosses above the orange line. If all signals are aligned, you can enter a buy position. Next, set your stop loss at the middle line of the order block and aim for a take profit that's twice the size of your stop loss. Or you can target another order block above. As you can see, this setup results in a nice profit. So, the CM Williams VIX Fix is a really powerful tool that can help you detect market bottoms during a downtrend. And if you combine it with another tool such as the stochastic, it can be a really effective strategy. Now, if you want to know the custom settings